Good afternoon. I'm Jay Morgan, Investor and Media Relations Manager, and thank you for joining me for the new Murchison Gold Investor Webinar. Today, I'm joined by our CEO, Alex Passmore, as we look over the recently announced feasibility study at the Crown Prince Gold Deposit. Alex will be running through the investor presentation, which was lodged with the ASX, followed by a Q&A session. So to ask a question throughout today's webinar, please use the Q&A function, which can be found at the bottom of your screen. Alex, I'll hand over to you.
Thank you for that intro, Jane, and good morning to all on the West Coast and good afternoon to those on the East Coast. It's a pleasure to be running through the latest update on the Crown Prince Gold Project. So New Murchison's flagship Garden Gully project, which is the broader project, is over the Abbott's Greenstone Belt north of Meekatharra. It's near numerous operating gold mines, including the Westgold's Bluebird gold mine and others. The Crown Prince project is the focus and our sort of flagship project at the Garden Gully Gold Project, and that has a shallow, high-grade mineral resource starting from surface of 280,000 ounces at almost 4 grams. There's a reserve that we put out in January around a week and a half ago, 140,000 ounces at almost 5 grams, which will be mined via an open pit. We have a production plan that's 100% underpinned by that ore reserve. So sometimes you might see production plans put to market that aren't entirely underpinned by an ore reserve. So this one is conservative and is just based on that reserve. We also have plenty of upside and growth in and around Crown Prince. So just at Crown Prince itself, the ore body is open down dip, and there's ounces below the pit, which we're looking at as an underground operation, and we're just starting to think about studies on that. And then more broadly, we have a very large tenure package of 677 square kilometres surrounding Crown Prince, which includes many prospects along major structures that can be brought up into an advanced state like Crown Prince has been. Now we have a strategic alliance with one of the big brothers in the area, Westgold, a 3 billion market cap Australian gold producer. One of their central hubs for gold production is at Meekatharra, and so we'll be using their plant. So we'll be selling gold in ore rather than gold doré bars, and we'll be selling that ore to them, and then they will be processing it and producing gold bars from our ore. Now that arrangement works very well. They have a big mill nearby that has capacity. We get the benefit of low operating costs by having that strategic alliance. So where we are so this map is a geological map, shows Meekatharra and the key transport routes. You can see I've outlined our tenement package in yellow or gold colour here, with the prospect names labelled. Now, just in terms of regional geology, the green belts on this map are greenstone belts, which are basalts and dolerites and are prospective for gold. The granites are in pink, which is they're less prospective for gold. And you can see here with the location of the Bluebird gold processing plant owned by Westgold. Westgold are outlined in the blue, their tenure package in the blue here. So it's a fairly standard, if there is such a thing, Archean lode gold deposit. Western Australia has plenty of production from these types of deposits, and in this region called the Murchison region, the metallurgy is good, the grades are high, and importantly, the nearby towns are supportive, and the all the regulatory bodies are understanding of what's going on in the area. So just looking at some of those prospects, so Crown Prince is our key asset that's on a pathway to production. We'll be producing from there in the middle of the year onwards, with first ore sales more likely just after the middle of the year. And then we have a range of prospects sitting behind that, which we will bring up into production eventually, hopefully. So just touching on that Westgold strategic alliance and our ore purchase agreement. So we announced an ore purchase agreement with Westgold in December. That is up for shareholder approval on the 28th of February at our AGM. Now, Westgold have a big shareholding in New Murchison Gold, in NMG. So they actually own 17%. So there's a listing rule, Chapter 10 of the listing rules, which requires us to go to shareholders and get approval for any material transaction with shareholders that have a large influence. So that's the background behind that. But we think it's a very good agreement. We mine and truck the ore to Bluebird. They process it. We reimburse them for their processing cost, and then we get paid 83% of the gold price. So we aren't having to build a mill. We aren't up for the capex for that, and we aren't up for the risk of processing interruptions and so forth. So it really de-risks the project having that agreement in place. The agreement runs over a 24. It actually has no end date, but we have a detailed production schedule that outlines all parcels being sent to Bluebird between 30 and 50,000 tonnes of ore per month for 24 months. So just recapping on New Murchison Gold's corporate structure and maybe touching on a few things that might assist with us getting into production on this side. So we trade under the code NMG. We are capped at around $78 million at the moment. We have 4 million cash at the end of January. Now we have around 800 million options that are deeply in the money, which are progressively being exercised. So this 4 million is actually growing day by day, and so that is funding our funding our activities to do all the pre-production type items like dewatering bores, tracks, pipelines, sheds, and so forth. So we're already moving ahead with the production pathway. Now, just the board and shareholders. So you can see Westgold's shareholder is our largest shareholder, followed by high net worths, mainly from the West Coast. We have a bit of institutional holding, but we are aiming to build the institutional holding of the company as we progress towards production. We're led by an experienced board management team. All the people have run or been involved in running operations before and have successful track records. So just turning back to some of the more operational and exploration highlights for a second. So Crown Prince, here's a zoom in on an aerial photo of Crown Prince. So you can see here we've got some spectacular grades that have gone into the resource. However, a lot of the very high grades have been top cut, which means they haven't influenced any blocks around them in the resource. So we think there'll be an overcall as we go mining here. And this is a cross-section view of Crown Prince, so open at depth. You can see some of the spectacular grades in there, which once again, are really there, but haven't been included in the resource model for conservative reasons. And so, as we go into production, we'll be able to capture those. This is what the ore body looks like at depth. So it's fairly typical of an Archean lode gold system in Western Australia: quartz carbonate vein, dolerite hanging wall and footwall, so clean metallurgy. Now onto our resource. So the resource is 280,000 ounces at almost 4 grams. Now that's made up of several zones. So we have a cap rock, which we'll be mining first, and then most of the pit it takes in this southeastern zone here. You can see a high grade southerly or southwesterly plunge. So these grade blocks, the legend is over here. Anything red is over 1.5 to 3, was 1.5 grams or better. Anything dark red is over 3 grams, and anything magenta is over 10 grams. So you can see this high grade plunge down to the southwest, and that really forms the basis of the open pit. Now, main and north zone, some very good grades in there. The pit can't go and take most of this high grade out as we're in close proximity to the Garden Gully Creek. So we'll be looking at that from an underground point of view. and that will give us life. So we've got about a 2.5-year pit on the southeastern zone, and then there might be another couple of years from an underground beyond that. So I'd encourage you all to look at our website and see all of that geology in 3D. We have a Verify 3D presentation on our website. This is a screenshot of one of those Verify presentations. So just showing how, our ore body is very much open at depth. There's no drill holes that close it off. So we see, we see growth there. The metallurgy is very clean. So we've undergone, we've taken Crown Prince ore through a variety of metallurgical test works. We have 3 main metallurgical zones: oxide, transitional, and fresh. All of these zones are well understood from a metallurgy point of view and from a Bluebird gold processing plant point of view. So we have different recovery factors depending on whether we're in oxide, transitional, or fresh. And they are in our plan and also get checked as we go grade control drilling. So we've completed the mineral resource. We've completed geotechnical and hydrogeological work, so we understand what a pit design looks like and a fairly conservative pit design. And we've submitted all of our required submissions to the regulators for works approval and mining proposal and mine closure plan, and they're all being assessed now. And we're starting to see questions come back from the regulators, which we're answering, which is a normal part of the process, and also we're starting to see some of the early approvals come through as well. And we've finalised our ore reserves, which we'll go through now. So the ore reserve at Crown Prince was based on a conservative gold price of 32.50 Aussie. So that is, we only looked at the ounces that were economic at 3,250 Australian dollar Aussie per ounce. So then the current spot price today is trading at 4,550, so well above that. So there's a fair bit of conservatism, and we'll probably get more ounces out of the mine plan as we progress. Now, looking at those same ounces at a near spot price, so 4,385, still well below actually today's spot price. The feasibility study financial model shows a pre-tax cash flow of $226 million over 30 months. Now, there's only a small amount of capital expenditure to get into production, so $5.4 million, which are the hard items that we need to permanently invest in to get into production. There is a working capital requirement on top of that, which is to pay 2 months or 3 months of cost before we get paid from Westgold, and that's in our model and our thinking as well. Now, we also think, well, I guess factually have $80 million worth of tax losses from being an explorer having a 30-year history of being an explorer. So that means we don't pay tax until we've made $80 million or thereabouts of profit. So we'll be offsetting our taxable profits with that position until we've exhausted that. And that's about, that starts to happen at about the 12-month mark through production. So the plan is to mine 140,000 ounces and truck to Westgold over 30 months, and we'll see, what happens after that. So this is a plan view of the mine layout, and just to give you an idea of where the key items are. So West Pit is really the main 140,000 ounce production plan. You can see here it's hemmed in by this Garden Gully Creek boundary here. So economically, the pit wants to go out into the creek. However, that would take us, another year or 2 years for environmental approvals. It's a sensitive area to the traditional owner group, the Wadjuri, and so we have no plans to mine, any further or any closer to the creek than what is shown, and we'll tackle any additional ore that's sort of too close to the creek. We'll tackle that from an underground position. So ore comes from West Pit, goes to our ROM, gets crushed by us. So there's a sample taken every 20 minutes and composited throughout the day. Now that is where we will pick up any of those additional ounces that have been cut out of the resource via the process of top cutting. So we've got a sampling regime where we get a sample, Westgold get a sample, and there's an umpire sample. And if Westgold and New Murchison's assay results are more than 5% out, we average the 3 with the umpire sample. And so that's basically that's a key number in how we get paid for gold contained. Then that same crusher has a weightometer, and that gives us our claimed tonnes. And the loader that's picking up the tonnes from the product stockpile, loading it into super quad trucks for hauling down to Bluebird, that also has a weightometer, and that gives Westgold their claimed tonnes. So tonnes, grade, and then recovery is determined by composite samples as we go grade control drilling, and also via the test work that we've already done. So that's how we build up the revenue line of the ore purchase agreement, and then the cost lines are really mining costs, crushing costs, trucking costs, reimbursement for milling costs, and then the Westgold price participation. So it's quite a simple operation, and but important to get a handle on that grade and what we're being paid for. So just turning to the resource to reserve conversion, 140,000 ounces out of a potential 226,000 ounces is not bad, but we of course would have liked to have seen the entire indicated resource go into reserve, and I'll just show you a few reasons as to why that hasn't all converted. So the main reason being this zone here was impacted by the Garden Gully Creek, and that is not dead ore, that is available for mining via underground. So I've tabulated that here. So we've got the southeastern zone below the pit, 60,000 ounces, and another 85,000 ounces, below the main and north pits. So all good material to be considered in an underground scenario that we will be looking into, as things progress. So just turning back to the pit for a second. So we have a 1 in 10 ramp, 2-lane ramp going down to 140 meters below ground surface. And actually, sorry, the last 30 meters is a 1 in 7 ramp and single lane to get right to the bottom of the pit. And the pit design takes into account cap rock, oxide, transitional and fresh material, and has different wall angles depending on which material we're mining through. And this has been designed very much with geotechnical risks in mind, and we've done 15 diamond holes to ascertain the geotechnical characteristics of these walls. So we wouldn't want to have a pit wall slip or failure covering ore or putting people in danger while we are also meant to be delivering 30,000 tonnes as a minimum per month to Westgold. So very important to understand the open pit mining risks here. So just another view of the planned open pit. So 140 meters depth at the bottom. That's quite big for the Meekatharra area. We will be backfilling this small lobe of the pit here, which is nearer the creek, and that's to let us also get as close as possible to the creek, with an abandonment bund inside our mining lease. Looking at the sales profile, so you can see here 30,000 tonnes a month minimum, probably more. Starting off slightly lower grade in the cap rock, and then getting up to a 6 gram type profile fairly quickly, which is great. So this is really strong cash generative sort of times according to our financial model, and then the grade wobbles around a bit at the end due to the tightness of the pit and mine scheduling. So all in all, our average costs per gold ounce sold at 2,221. Now this is including all of the Bluebird price participation and operating costs. So our actual costs are a lot lower, but then you would have to take into account the fact that we don't get paid 100% of the gold price. So what does that look like in terms of a mine cash flow? Well, here we are in February now. Then we start to spend on building the project. So around 2.5 million in May, and then 4 million in June. So I'm looking at the left-hand axis here, and then around 8 million in September, and this is when the mining contract really starts. And then we're building cash from that period onwards, based on 4,385. And over a 30-month period, we get to 226k cumulative cash build. So, a very profitable pit, very strong cash build, over the months. And you can see from, most months we're doing sort of 8 million in pre-tax cash. So, really, really strongly economic pit, and we look forward to getting into production. In terms of funding and how we're looking for funding at the moment, so we have a cash balance of $4 million. We have options that are in the money of $5 million. So, we're funded to around $9 million before we give the project the formal go-ahead. And so, so we're spending that money on early works and grade control drilling and so forth, so we can get into production as quickly as we can following project approvals. So in terms of operational readiness, we are doing grade control drilling right now and getting ready for the first few benches of mining. We're starting dewatering bores. We're drilling dewatering bores at the moment. We're starting to dewater from March onwards, and that gets the water level down below our mining levels, which is important for blasting and also mining to keep a dry pit. And we're disposing of that water actually into 2 disused Westgold open pits nearby. So, one of the more practical cooperation examples from the strategic alliance. It's not all about or purchase and processing. There are other things like water disposal, sharing mine site camps and so forth that we're doing with Westgold. We've ordered the crusher, so we'll do a whole of ore crush, and we've ordered the sample crusher, and that's being manufactured and is on its way, and that should come to us in around April, and then be ready for putting onto the site with the crusher by mid-year. So that's obviously a fairly important piece of kit, given just how important that grade is for our payments. So from here, build the project to scale, increase the project, looking at the underground, advance the other projects, and look forward to commercialising Crown Prince. So with that, I'll hand back to Jane for questions.
Thank you, Alex. I might actually get you to stop sharing your screen there. And again, webinar attendees, please use the Q&A function, which can be found at the bottom of your screen. So the first one is, the study mentions that NMG's plans to raise equity and debt. Can you provide some more details on the expected funding mix and how the company plans to balance these sources?
Sure. So the working capital requirement, so if you remember that cumulative cash flow graph that I was showing, there's a $22 million max cash negative position at the project level. So the company has $9 million, as we come into March and April. So that funds, early works, corporate, and so forth. So just looking at the project for a second, it can easily handle a debt piece, and so we would look at sort of 10, 15 million, 20 million in debt, which gets paid back in a matter of 6 months, or thereabouts. So, we're looking at, things that aren't very, dilutionary to shareholders. There'll be some equity raising as well, and, just to balance the risks out there. But, all very doable for a project that's got such high returns on capital. We've got no plans to raise equity, in the short term, given that we've got those options. We'll look at it as we go to, press, go on the project financing, which is in April or May.
All right, you did mention this in the presentation, but so how sensitive is the project to fluctuations in gold prices and operating costs?
Sure. So for every 100-ounce change in the Aussie dollar gold price, the cash flow changes by the pre-tax cash flow changes by about $11 million. So, we've, since completing the study, we're already, it's up $200 an ounce almost. So, the project's looking $22 million better than it was, 3 weeks ago.
Wonderful. So next one, again, you mentioned this in the presentation, but given the ore will be sold at the mine gate under an ore purchase agreement with Westgold Resources, what are the key terms of this agreement and how does it compare to traditional gold mining and processing models?
Sure. So, well, different in that well, we think it's very smart because, you know, the gold price at record highs and you know, getting into production more quickly is important. And also it lets us mine the deposit over a 2.5 year period. And you normally wouldn't build a mill that could mine your deposit over 2.5 years. So we get the benefit of using, you know, Westgold's big mill that has capacity. We get the benefit of their low unit costs of production, you know, of milling. It's without, you know, it's a lot less risky. It's been in production for a long time. There's no ramp up risk. There's not a risk that the plant's going to break down, all of that sort of thing. Now, why, you know, the downsides though are that, you know, there's effectively a 17% royalty being paid to Westgold for the use of their plant, which, you know, is, you know, that goes for 2.5 years, you know, based on gold production. So that hurts, but it's you know, it's commercial and it's better than building our own plant, basically. So that you know, the key things that we've got to be careful of, you know, are grade, recovery, you know, and making sure that we understand how much gold is in the ore that we're selling to Westgold, and we think we're managing that quite well.
Thank you, Alex. This one's come through a few times just about the underground potential. So, and we talk about it in the study. So the question here is, how soon can we expect feasibility studies on these expansions, and what impact could they have on the overall project life and returns?
So we're working on that now. You know, we'll have more to say probably in September, October, around that sort of time. You know, it'll take us that long to understand, you know, the underground, and also, you know, drill a few key areas. From what it looks like at the moment, you know, it might add 2 or 3 years to the life, you know, at about the same production rate.
Wonderful. Okay, so there are 17 outstanding holes outside of Crown Prince currently in the labs. The question here is just about when results will be expected.
They would either be in the quarterly or have been released. We don't have any. There are not 17 outstanding, so not sure where that one comes from. So we always put out you know, any results that are outstanding we will put out with the quarterly. So happy to go and check that, but yeah.
Okay.
But it's worthwhile just on that point. I mean, we're back doing mineral drilling right now. We have been, you know, for the last 2 weeks. So, you know, now already there are results outstanding, you know, from this year's drilling. But there's none left that are hanging over from last year. No.
Thank you, Alex. This one's come through a few times again, and you have answered it, but I might just ask again in case the attendee wasn't online. Will you need additional funding in the short period during the first 3 to 4 months of digging Crown Prince? And if so, how will NMG look at funding this, and how much is needed?
Yep. So 22 million, a mix of debt and equity. No plans to do this in the very short term. We are being, you know, there are debt providers that are, you know, we're talking to, and all of those conversations are going well.
Thank you again. Sorry, bear with me. There's quite a few coming through.
Right.
So, next one. So what is the estimated cost for remediation rather of the pit once mining finishes in a couple of years?
About just over $2 million.
Okay, perfect. Just want to hear on the recent Bonanza grade. So there was an announcement with 20 meters at 2.77 grams. Is that included in the MRE?
It is, but only because there was only one hole and no other holes around it. It was only included first of all, it was top cut down to 120 grams, and it was only allowed to influence a very, very small area. So only a few meters away from that drill hole we're included as high grade. So we're actually drilling around that high grade next week. So, you know, we will see if we can add to that, and hopefully we can.
Thank you, Alex. And I've actually just looked at the time we're running out. So just finally, what should investors look forward to over the coming 3 to 6 months from a news flow perspective?
So drilling, you know, inside the Crown Prince pit area, doing grade control drilling, and some key, sort of testing some key areas like that high-grade zone. And then early works commencing, and then mining approvals being received, and then production.
Wonderful. Well, thank you everybody for joining us for the new Murchison Investor webinar. If we've missed any of your questions, please feel free to reach out via the contact details on the bottom of the ASX releases. But thank you again for your time.
Thanks all.